Hello, everyone. We're going live to cover Dvlt AI Incorporated, trading on the Nasdaq under the ticker symbol DVLT just minutes after the opening bell on November 5, 2025. At this very moment, shares of DVLT are trading around $1.80 after an extremely volatile start to the session. The stock opened with a strong upward gap at 192, briefly touched an intraday high of 1.94, and then sharply reversed direction, sliding back toward yesterday's closing price of 1.78. This kind of movement doesn't happen by accident. What we're witnessing this morning is a direct reflection of intense market tension, a tug-of-war between investors who see a game-changing opportunity and skeptics who view the company's recent news with deep suspicion. The catalyst behind this surge of enthusiasm came from yesterday's major announcement. Dvlt AI disclosed an exclusive licensing agreement with Celex Holding Company. Under the terms of this deal, DVLT will receive an upfront payment of $10 million, which is a substantial amount for a company of its current size and market capitalization. But the real spark for investor excitement isn't the $10 million upfront. It's the potential future milestone payments, which could theoretically reach as high as $2.55 billion. For a small-cap company like Dvlt AI, that figure sounds almost unreal, and it's precisely what's driving all the buzz today. This deal, combined with a recent string of partnership announcements, including projects to tokenize data, music, and even a meme coin distribution for shareholders, has positioned the company as a potential breakout story in two of the market's hottest sectors, artificial intelligence and real-world asset tokenization. However, the reality visible on the trading screen tells a much more complicated story. The early spike toward 1.94 was immediately met by heavy selling pressure. That kind of fast reversal signals one thing. For every optimistic buyer chasing the billion-dollar dream, there's a well-informed seller betting on the opposite outcome. At the heart of the bearish argument lies a high-profile short seller report issued recently by Wolfpack Research. This isn't just a casual critical note. It's a full-blown investigative takedown. Wolfpack directly accuses Dvlt AI of misleading investors about its technology and calls attention to the regulatory history of CEO Nathaniel Bradley, who has previously faced SEC-related charges. For bears, this report is a cornerstone argument that the company's flashy announcements may be more style than substance. Now let's step back and look at the numbers behind the battle. According to the most recent data from fintech trackers, short interest in DVLT stands at about 7.27% of the float. That's not an extreme figure by itself, but the borrow fee rate tells a more interesting story. It's currently around 12.45%, which is quite high. What that means is that short sellers are paying a premium just to maintain their bearish bets. A high borrow fee indicates strong demand to short the stock and a high level of conviction that the company's fundamentals don't justify its current valuation. But there's another key data point: days to cover, which measures how long it would take all short sellers to close their positions based on average daily volume. For DVLT, that ratio sits at just 0.13 days, an extremely low figure. In practical terms, that means short sellers aren't trapped. They can enter and exit positions very quickly, which helps explain the wild intraday volatility we're seeing. This isn't a slow squeeze setup. It's a fast-moving battlefield dominated by algorithmic trading systems, retail momentum players, and short-term speculators, all reacting to the same conflicting narratives. Meanwhile, social media is ablaze with debate. On Reddit and X, formerly Twitter, two completely different schools of thought are emerging. The bulls point to the Celex partnership and the previously announced IBM collaboration, suggesting these deals validate the company's technology and long-term potential. They note that year-over-year revenue has shown growth, modest, but trending in the right direction. The bears, however, focus on one devastating metric: shareholder dilution. According to some financial data providers, Dvlt AI's total shares outstanding have grown by more than 3,500% over the past year. That kind of expansion in the share count is extraordinary and often catastrophic for existing investors. To put that in perspective, the company reported a net loss of approximately $68.6 million over the past 12 months on revenue of just $4.4 million. To sustain operations and fund development, DVLT has been issuing new shares at a rapid pace. This continuous dilution is a major concern. Every new share issued reduces the value of existing shares, making it harder for the stock to sustain rallies. So, what exactly does Dvlt AI do? The company was formerly known as Wisor Technologies, and has since rebranded to focus on the AI and data tokenization markets. It now operates under two primary divisions. The first is the Acoustic Science Division, which holds a portfolio of legacy patents in wireless audio and ultrasonic data over sound technologies, including intellectual property comparable to what's used in ultrasonic communication systems. The second, and far more important, is the Data Science Division, which focuses on AI-driven data valuation and the tokenization of real-world assets. This is where the Celex deal becomes critical. Under this agreement, Dvlt AI's proprietary technology will be used to tokenize sensitive biotech assets, such as genomic data, diagnostic results, and pharmaceutical information, transforming them into secure, tradable digital tokens. This concept, if successfully executed, could open up entirely new markets for secure data exchange and monetization. It's a bold vision, building a kind of decentralized marketplace for data, something many in the tech world believe could be worth billions in the years ahead. Adding to the bullish sentiment, Celex Holding has taken a strategic equity stake in Dvlt, reportedly acquiring over 8% of the company. This investment, along with insider purchases by company executives, signals internal confidence in the firm's long-term direction, even if those insiders bought at far lower prices than current market levels. Still, not all recent developments have been positive. Just 2 days ago, on November 3rd, Dvlt AI announced the termination of its planned acquisition of API Media Innovations. While both companies describe the decision as mutual and non-material in financial terms, it does raise concerns about execution and stability, reinforcing parts of the bearish argument. For investors, the situation presents two sharply contrasting paths. Path 1. The bullish scenario. The Celex partnership delivers on its promises. The $10 million upfront payment strengthens the balance sheet, and the company begins to realize portions of the $2.55 billion in potential milestones. The AI tokenization platform gains adoption. The company's technology is validated by major partners, and dilution slows as revenues begin to cover operational costs. In this case, today's price near $1.80 could, in hindsight, look like an extraordinary entry point. Path 2. The bearish scenario. The optimistic projections never materialize. The Celex milestones remain theoretical, Wolfpack's criticisms prove justified, and the company continues to burn cash faster than it can generate it. Further equity offerings dilute shareholders even more, and the stock grinds lower under the weight of its expanding share count. So, what should investors watch next? First, the upcoming earnings report. That will provide clarity on how the $10 million upfront payment impacts the company's balance sheet and whether management provides concrete revenue guidance. Second, updates on the Celex integration. Investors will be looking for any measurable progress toward those milestone payments. And third, SEC filings for potential new share issuances. If the company can demonstrate that it can fund operations without constantly issuing new stock, it could signal a turning point in investor confidence. In summary, Dvlt AI sits at the intersection of immense promise and considerable risk. On one side, it's positioning itself as a pioneer in AI-driven tokenization, a field that could reshape how data is valued and traded. On the other, it faces credibility challenges, ongoing cash burn, and a reputation clouded by heavy dilution and regulatory baggage. The volatile action we're witnessing today, that rapid surge and equally fast pullback, isn't random noise. It's the market trying to reconcile two extreme narratives in real time: the billion-dollar dream versus the harsh reality of a struggling balance sheet. At $1.80 per share, Dvlt's price represents that fragile equilibrium, the midpoint between revolutionary potential and financial fragility. For now, the story of Dvlt AI remains unwritten. The next few quarters will reveal whether this company becomes one of the most surprising comeback stories in the small-cap tech sector, or another cautionary tale of hype outpacing execution. This is not financial advice.